Hello traders and welcome back in the new week ahead video. This is Mohanad Yakout, Senior Market Analyst at Scope Markets, and today we'll be looking for the risk events that will be affecting markets during the week ahead, or basically which starts today, Monday the 20th of July 2026. We have seen some big moves on oil prices by the beginning of today's Asian session thanks to the escalation and military and geopolitical tensions that happened over or across the weekend. How will this geopolitical scenario or environment affect oil prices during the current week? This is something that we will be discussing shortly. We will also be looking at the expectations for the ECB's interest rate decision during this week, which is highly anticipated by the markets to see an interest rate hold around the current levels. However, should it be probably a hawkish interest rate hold? Will we see President Lagarde and the narrative by the ECB that, okay, we will be afraid from the rising oil prices again, that might basically push inflation levels again higher? So as of now, markets are basically looking for or expecting an interest rate hike as soon as the next meeting taking place in September. How will we trade the euro against the other currencies during this week? We will definitely be discussing this as well. And to end the video, of course, we'll also be looking at the PMI numbers for the major economies. At the end, we'll also be looking at the technical analysis, the key supply and demand levels that we should be looking for and how to trade those levels during the week. Make sure that you stick around till the end of the video to get the answer. Okay, so first and foremost, whenever you go and search for the latest headlines on what's happening in the Middle East, all you get is basically escalation, and more escalation by both parties, whether the US or Iran. So one of the headlines that basically should concern markets is that Iran vows not a single drop of oil or gas will pass Strait of Hormuz, which is basically, as of now, completely and effectively closed. So not a single drop of oil or gas right now is passing through the Strait of Hormuz, and we basically expect that this should be the scenario moving forward throughout the week if the current escalations continue. US renews attacks on Iran for the 9th day, so we are basically seeing this, exchanged military tensions between both countries, not only in Iran and the US, or also, again, we are seeing some other Gulf countries. The new thing here is that we are seeing some American troops killed in Iraq, which is something that the US, I think, will not take, lightly, and we will see some heightened military action during the next couple of hours or days. As long as this is the current or the base case scenario, we do expect that oil prices will be moving higher. So by the beginning of today's trading day Asian session, we have seen this jump higher to $85 per barrel. Probably we're now seeing some technical retracement, which is something that it should be expected. However, will we see any support levels hold during the week and again moving higher? This is something that we will be discussing when we come down to the technical analysis. Moving on to the economic agenda here. Those are the high risk events that markets will be watching for. So today we do have the inflation rate from the Canadian economy. Something to keep in mind during this week is that the pound will see a lot of high impact data releases coming out. So tomorrow on Tuesday, we do have the unemployment rate. The forecast is to remain around the same levels of 4.9%. On Wednesday, we do have the inflation rate again out of the UK economy. Expectations are to move a little bit lower to 2.6% after this spring effect. And because this data basically is for June, where we have seen some lower levels on the oil prices, so a move lower on inflation again is probably expected. However, now that prices are moving again higher, so probably expectations for the next release for inflation rate for July should be again higher. This is why I don't really believe that markets will be overreacting to the inflation rate, even if it came lower than 2.8%, because it's a given. Oil prices were lower in June, and we'll probably need to look at other metrics like the core inflation rate. How did it perform? Although we do have the inflation spillover, yes, oil prices affect pretty much everything in the economy. So markets wouldn't really react so much to the inflation rate coming out of the UK. However, it's still really important to watch for. On Thursday, we do have the ECB interest rate decision and press conference. Markets are expecting, with over 90% probability, is that the interest rates will be kept around the same levels of 2.4%, or basically between 2.25% and 2.50%. However, markets will not be at all reacting to the decision itself. It's a given. We will have an interest rate hold. However, in the press conference following the interest rate decision and in the monetary policy statement, we will be looking for the language and the tone. Is the tone going to be a hawkish hold? Will inflation fears or inflation again going higher is something to be concerning to the ECB? I would say yes, of course, because again, we're seeing oil prices moving higher. But to what level the ECB is going to commit to markets that we are going to raise interest rates? How much, of the language will be hawkish versus how much will be dovish? This is how we will be trading with the euro. In all scenarios, I do really expect this to be a hawkish hold by the ECB, and we'll probably see some strength on the euro during the week, and especially after the press conference. Moving on to Friday, we do have the PMI data, the flash readings for a couple of economies, the British economy, the euro economy, and the US economy as well. This is really important. Again, we want to see if the global economy at the moment will be able to accept, let's say, a higher for longer interest rates, or probably even interest rate hikes by the major central banks, given what's been happening in the Middle East and the fresh round of higher inflation levels expected to see during the next period. Let's move on to technical analysis here. Let's see the key supply and demand levels on the key assets. Starting off with the dollar index. The dollar index on the 4-hour time frame is clearly trading inside a downward tilted price channel. We have seen how well basically the dollar bounced off the highs and the lows, or the upper limit and the lower limit. We are currently just trading around the middle line of the channel around here. So the key resistance for me, or something to highly watch during the day, is the last minor high around the levels of 100.81. As soon as we see a clear break and close above the 100.81, as soon as we create a new higher high, I think we will be moving higher to levels of 101 points, and then the upper limit of the price channel 101.20 roughly. So a slightly upward move at the beginning of the week on the US dollar is something we do expect. However, how prices will move or react to the touch from the upper limit is something that will actually decide the behavior or the price action on the dollar index for the rest of the week. So if we do see a break above the 101.20, we will be moving higher to the previous high around 101.75, or if we do see a move lower again from here, bearish price action. So I do believe we will continue moving in this slightly tilted to the downside price channel here. Moving on to the euro versus the dollar. We did discuss during the previous week a bunch of resistance levels. We do have around the 1.1470. We have seen a brilliant move lower during the previous week, especially on the 16th of July on the euro versus the dollar. I do believe that we will be moving a little bit lower. Any price action on the euro versus the dollar, as long as we're trading below the 1.1475, 75 is basically bearish. If, however, during the ECB we do see a move higher, this level will be key to defining how the next trend will look like on the euro versus the dollar. So if we move higher, again, test the 1.1475. As soon as you see some bearish price action around here, so yes, we will be respecting those levels again. However, a break above 1.1475 during the week is the clear reversal, or the entry reversal signal for a move higher that will probably move as high as 1.1590. I don't think this is the higher probable scenario. I think the probable scenario is that we will move higher with the ECB and after the press conference. However, as long as we still trade below the 1.1475, the general bias, it remains bearish. On the pound versus the dollar, we have seen a brilliant rebound from the levels of demand, 1.3420, and it seems that the pound versus the dollar is again moving higher. We can pretty much aim for the previous high, which is 1.3560, as a very reasonable target during this week. Of course, if we stay above the 1.3420, however, a break below will just cancel this bullish bias here. Moving on to gold, we are still trading inside this brilliant falling wedge here. You can see how gold prices have been moving inside this falling wedge. We do have a couple or a cluster of demand levels and support zones around the 39.70 levels dollars per ounce. And the key thing to watch for right now or during this week will be the supply, the minor supply zone around the 4031 or the $4,031 per ounce. As long as we trade below those levels, I think we will continue in a weak sideways manner. However, once we break above the $4,030 per ounce, I do really believe that we will be seeing a much higher move on gold prices, that maybe we can push higher to 4,200. This is what happened on oil prices by the beginning of the week. So we have seen this upward move. It hit our target around the levels of 85.36, which was basically a previous gap to fill. We have filled this upward gap. Again, we have seen this gap at the beginning of the week, which is now completely filled. So trading oil during the week is just looking for support levels that are strong enough, to start another round or a swing higher. So the next support, minor support, I would say, is the $81 per barrel. However, if we continue moving lower, the following support level will be 78.35. There is no point at all of selling or, going into a short position on oil prices right now, unless there are negotiations or talks of negotiations, or again, any ceasefire of any kind. However, as long as the escalation continues, which looks like, to be the base case scenario, we do expect that any support levels are basically good buying levels on the US oil. The S&P 500 brilliantly rebounded from the supply levels that we have mentioned in the last video, around the 7,582 levels, 7,582 points. We have seen this brilliant downward move to almost 74.32. Today we are seeing some upward moves. However, this minor resistance around the 75.10 is something that we should definitely watch for, because any rejection around those levels is something that will push the prices lower again to the 74.30. So I don't really expect any fireworks or big movements on the S&P during this week. However, let's see how this minor resistance will behave, and whether it will push prices again lower, or in case we have seen a break above basically the previous high, is something that we will be looking for as a target. That was all for today's week ahead video. Thanks so much for following this. Watch or wait for us again in the next video next Monday. It was me, Mohanad Yakout, Senior Market Analyst at Scope Markets, and I'll see you guys in the next one.